Hey everyone, John Henry here, slingshotfutures.com, and welcome to the Market Mindset, where we take a look at the psychology behind the moves today so we can better understand tomorrow. And today we're taking a look at crude oil futures. Now, the crude oil had a pretty good day of movement overall. I mean, all things considered, it was a little bit range bound, but it did have some good moves to kind of kick things off. Now, one interesting level that we came into was a major channel off of the 60-minute chart, which we caught a nice bounce off of for a quick snap higher. Now, this move up, we ended up just really kind of getting a deviation off of that initial drive lower. They kind of doubled themselves up and then failed right back down. So this was an initial buy of the morning, buying off of that 60-minute level for a pop higher. Once they got to the highs, notice all of the weakness that began setting in. It's a little bit of a clue. Remember, today is the last day of the month. And what do we have here? We have monthly resistance. This was last month's open. So basically what that means is last month's open and last month's close being right here and the end of the month, these levels are going to be big levels of concern. They're basically fighting over, are we going to be above or below last month? Is this a bullish or bearish month? And they're fighting over that right now between these two levels. So the fact that they came right off of that level to the tick didn't really come as a huge surprise because of the time of the month, right? It's the last day. Now, as we began pulling back, we got a nice bullish bounce, and I think the reason I marked this one up, it's not the best buy signal in the world in hindsight, but while you're trading it, it's good to know the difference in the follow-through and what happened. And this was very likely to have trapped a lot of traders because it's a beautiful buy move. We have a nice breakout to the upside, pretty good pullback, and a nice push back up for a very strong bull candle closing right on its highs. I would be shocked if there weren't some traders that didn't get stuck on this. So because of that, I like breaking those types of things down. What would have told you to stay away from that one? On this move down, we have a micro double top and monthly resistance, and we have 3 consecutive bear candles, very strong in the sense that they are closing below the prior candle's low with a decent amount. They still have some good movement to the downside. So with that bearish pressure, that's one way that you would look at that, saying, well, the bearish pressure is pretty strong here. A weak bear move would look something like this, right? Where they're not able to really detach from themselves and then they break out. In this case, though, they were able to detach. They were able to get away, nice gapping to the downside in form of candle right there. Good bear pressure. That tells you that maybe you might want to wait for a secondary bounce. Let the initial buyers come in and then wait for the second one, and the second one never triggered. So a lot of traders may have gotten stuck on that first one, or they may have waited for the second one and never got in. Either way, that leads into this next trade. Knowing that buyers are stuck here because they got bad follow-through, bad continuation, and the secondary buyers weren't even triggered in, they're going to be very fidgety. They're going to be quick to leave the trade. Now, doing it here with a very strong bear candle, bull breakout, absolutely no follow-through, into a strong bear candle, all of the buyers that got in here, they can exit with a really small stop. They're talking 4 ticks or so. So that allows them to exit with minimal damage, and it also allows the sellers to pile drive down for a secondary move to the lows with a trap on the high. So it's kind of a counter play, right? The buyers got in, they got trapped in this case, it didn't follow through as they were expecting, and the sellers are given a chance to go against them. Any of the buyers that were stubborn, that didn't realize what was happening, didn't want to exit early, didn't want to take the small loss and call it a day, their stops are going to be underneath the low, and you can see that stop run that happened at the bottom. So very good excuse for the sellers to jump in, knowing that there are going to be stubborn buyers. There always are stubborn traders on one side or another, and it's a good place to potentially get a stop run, and the sellers were able to get a nice drop lower on that stop run push. So just a great day of both technical analysis and fundamental analysis with the market psychology, knowing that the buyers are trapped and using that against them. Even if you were one of them, you were able to reduce the risk by exiting at a small stop, reversing short, and then making it all back times 2, right? So a great opportunity today in terms of trading with both technicals and market psychology, and that's going to do it for this one. So hopefully you learned something, hopefully you found it interesting, and we'll see you next time.